macro market trends, stock selection, ETFs, options, just some of the topics covered in Tactical Trading. Well, this time around, we're going to talk about stocks that you may refer to as earnings machines, and you'll find out why as we talk with Kevin Cook, who is our senior stock strategist at Zacks.com, and he joins us once again to kind of put this all into perspective for us. Now, Kevin, you recently wrote about these high-flying stocks that people consider high flyers, like Netflix, Priceline, Chipotle, Baidu.
Yep.
How investors could have used a system to reap doubles, triples, maybe five-bagger returns from these same stocks. So could you explain to us, if you would, how anyone would have had to have the discipline to stay in these stocks for a year or two, maybe longer, as you suggest in your article, when these PEs were like soaring more than 50 times?
Yeah, well, you framed the question just right, because when you watch some of these stocks with a 50, 60, 70, 80 PE multiple, and they just keep going up, if you're an investor, even anything close to a value investor, you're saying, I'm not going to touch that stock. But at Zacks, we focus on earnings. And specifically, we focus on earnings estimate revisions that tell us about future earnings momentum.
Right.
And all these stocks had excellent earnings momentum. Our system gives stocks a rank based on that earnings momentum and the upward estimate revisions. We rank them number 1, strong buy, number 2 is a buy, and number 3 is a hold. So let's take a look at some of these here now. We're looking back at, I've got Apple and Caterpillar in here too, which you didn't mention.
Right.
A little more conservative stocks. Value investors may have looked at Apple and Caterpillar, but you can see from those dates in late 2008, even into 2009, look what some of these stocks did. Apple, 100 to 400. Chipotle, 60 to 325.
Yeah.
Netflix was the huge one, 25 to 285. Theoretically, the Zacks Rank could have got you a 10-bagger in Netflix. So the point here is that as long as a stock had earnings momentum, it maintained a Zacks rank of number 1 or number 2, sometimes slipped down to a number 3 hold, but none of these stocks ever went below a number 3 hold. So that's how the Zacks rank kept you in these names for these big moves.
So probably when investors take a look at that soaring effect, they sit back and they say, well, these stocks can't go, soaring higher forever. You also mentioned front-running the elephants. When you talk about buying before institutional investors get in. Talk to me about that a little bit.
Well, that's why our model works. Len Zacks came up with this model 30 years ago, and it's been tested and proven. And what's really going on is that if you're an institutional investor, you have a valuation model. You have sort of a black box that tells you, what am I going to pay for this stock today based on its earnings tomorrow? Well, the data you need to plug into there are earnings estimates for tomorrow or next year. And so we get that data, we crunch it every night. And when we see earnings estimates start to go up, we can say this stock's a buy now before the institutions can lumber into it. Institutions, they got to go to committee or a pension fund, mutual fund, insurance company. It goes to committee. Should we buy this stock? Shouldn't we buy this stock? And it takes them weeks to build a position because they're not going to buy all 500,000 or 10 million shares at once.
Right.
So the individual investor can get in early. So I've just highlighted some of the things here, why it's a cause and effect relationship here. We talked about institutional investors, how we can front run the elephants by getting in there first. EER stands for earnings estimates revisions. And we look at it as it simplifies all your other fundamentals. If you can just drill down to this one, earnings estimate revisions are predictive. It makes it a tangible metric. And then lastly, if you look at charts, a lot of guys, they're looking for the volume breakout, the big surge, because that tells you that the elephants are coming in. Right. Well, earnings estimate revisions can get you in before that move happens on the chart.
So it all comes down to earnings estimate revisions.
Absolutely.
So it sounds like a convincing argument, good method for finding and staying in winning stocks, obviously, but of course we can't go back in time. Now we have to look to the future. So how do you suggest making money on these stocks? What have you done for me lately,
exactly.
I guess, what I'm trying to say, but politely.
I can't take you back in time to buy Netflix at $100 or Apple.
Right.
So a couple different ways to look at it. Follow the Zacks rank. I'm going to show you some names here. Some current names that I'm investing in and have positions in. Cummins, Eaton, CNH Global is the Case New Holland brands of farming and construction machinery. Deere, also farming and construction machinery. and BAS is Basic Energy Services, an onshore driller. So all industrial stocks here, and those first four, major industrial manufacturers that have a broad overseas exposure. So these American companies, well, CNH is actually owned by Fiat now, but these companies have broad exposure. They're selling to overseas markets, construction machinery, agricultural machinery. So I've been trading these. I buy the dips on these. Now, these are not high flyers, so we're not talking about 30 PEs here. These are closer to value stocks, but they have great earnings momentum and seem to maintain the upper Zacks ranks of 1 and 2, sometimes slip to a 3. Kevin Matris this week did an earnings screen. He's our research wizard here, and he did what he calls an earnings acceleration screen, right? So he looked at Toll Brothers, Avalon Bay, Global Geophysical Services, Eldorado Gold, he's got a gold stock here, and USTR is United Stationers. So definitely look at his article and check out how he built this screen to find what he calls earnings acceleration.
Okay. Well, you can find more columns by Kevin Cook, and you may want to check them often because he certainly writes a lot of them during the course of a business week. They change frequently on Zacks.com, but in those columns is where he kind of calls your attention to different stocks and different trends and issues that are on his radar screen. You can also follow Kevin's writing on Twitter if that is in your inclination to go to Twitter. At Kevin B. Cook is the address, and he writes about on Twitter what he writes about on Zacks.com. With Kevin, I'm Terry Ruffalo.